today is really wild. The opening price was a hit, but not in an expected way because it didn't respond to the PCE. So the basically institution involvement was to have enough level to be prepared for the selling off or the buying, but to be prepared for it. And then it did sell off after J Powell right here. This is just I think liquidation around here, and then fluctuate and go down. What basically J Powell said was same thing from the minutes, that they won't stop until the inflation is under control. They might slow down based on the data they see, but the key words in my take were some of the name drops that the previous Fed chairs that were considered to be very hawkish, he dropped those names, and that kind of implies that he might be going in that direction as well, very hawkish, which translates into faster rate hike, and 75 I think is at this point almost sure. As previously mentioned, even 100 points rate hike might be a possibility. I think they just want to speed up first. And yesterday slightly, because of the institution's involvement at the last minute, I thought they were implying something which could indicate J Powell being dovish, but after he reiterated the minutes and dropping names, I think it's more likely that the rate hikes will speed up. And today it traded below the bell curve, which is pretty unusual thing, and that could indicate that it's the end of bear market rally to me, and looks like it's going to continue to go down and maybe have hiccups here and there, but I don't think we'll see the highs or the neck until the earnings. So by neck I mean like these tops until the ceiling here. I don't think we'll be seeing that again until the earnings, and it looks to me that we're heading down. So heading down here, the closing levels are 394.30 and 399.30, and I have this price in case this one was just J Powell effect, which is possible, and the bell curve they will retract it back, so from there to the next, but I don't think this is likely, so I'm just going with this one, the lower one. And the MACD RSI strategy that has been working the past week doesn't work on a day like this. That's one of the other things why the sentiment is really important, and as this shows, is a very strong bearish sentiment. When that happens, the divergence that's against the sentiment, it gets ignored, and that the divergence that's hidden to the sentiment gets empowered. So what I mean by that is this is bullish divergence, but it gets ignored. The bullish divergence is when the lows of the price are going lower, but the momentum is going higher. So that means they have more interest here to push it back up. Usually, that's what the bullish divergence means. And it gets completely ignored. And the hidden bearish is when the price is lower, there's a higher interest there, so that the price goes even lower from there. That's what. But this doesn't really work in a flat or bullish sentiment, so we always want to look out for the sentiment.